Welcome to a new update, which is going to be really short. Next week we are back with a regular setup, as right now my microphone is not working, but the markets are working. We are seeing the markets going up, which is better than expected, with CPI, which was higher than expected, and everyone was a bit overhyped when it comes to CPI, and finally we just see a very normal reaction. And why do we actually see that? That's what we're going to discuss today in this relatively short update. But before we continue, make sure to hit that like and subscribe button. Next week we're going to do a very cool promo, so tune in on the live stream on Monday Eve at 7 p.m. because then we'll kickstart a very nice promo. Also make sure to check out our Twitter and Instagram and hit that link of the premium membership, which gives you 1 week for free to check my personal trades, to check the trade IDs from the platform, and to help you grow as a trader in this market, as this market is very difficult at this point because we had CPI coming in yesterday, as we can see in the price action here, and CPI came in worse than expected. So core CPI, which is one of the two big numbers, came in with a higher number, and actually the highest of the year at 6.6. We also saw CPI coming in at 8.2, which is lower than what was last month's number, as that was 8.3. However, the forecast was 8.1, and due to that, we had an initial weak reaction as the markets were going down. So markets were falling, which was regularly expected. I think the mass were short, and actually the mass was assuming that we were going to have this fall or continue the downwards momentum of the Bitcoin price action, and these levels are very old. We have been hovering in this range for a month, and we have been now sweeping the actual low for liquidity and testing range low overall. However, what did we see after? Not only Bitcoin showing such a strong move back up, but we also saw the US equity markets running quite swiftly, as the US equity markets have been going up 5.5% from the actual low from yesterday. So a very strong bounce, which has several arguments. First of all, the inflation number, or the inflation, is dropping by a bit. Europe is even having negative month-to-month numbers at this point on CPI. We also had Biden speaking and midterms coming in, which means that Biden says that inflation has been 2% on the past quarter, so the Fed policy is working. Then we also have the tremendous amount of shorts being open in the market. So when the market starts to turn, like we have been seeing here, shorts are closing their positions. They have to do that through longs, and then people start longing as the price comes back up, and then shorts get stopped out, which is even more longs, and that's why we saw this accelerated move here. Now, that is another argument, and that all combined with the fact that there are some arguments that the Fed will be jumping into the bond markets to actually not get the same cascade as the UK is having. Because if we're going towards the UK governments, we can see that the yields have been accelerating like no tomorrow in the previous weeks and months, and we're getting towards the climax. Today is a very big day for Great Britain, and that's why they fired their prime position on this, or the prime person on this position, to actually cover everything regarding the yields. But the US is just following through with such a big move as well. So yields are currently still running massively, and the assumptions are that within a few weeks from now, the Fed will be stepping in to actually cover the bond markets, which means that most likely they'll be intervening the markets through not reducing the hikes or adjusting the hikes, which is still a possibility that people are really focused on that. But I think that they won't be doing that until at least the first quarter of next year. But we already have priced in 2 more hikes, and then we get to the end game of the actual policy that they have right now. So it's not the time to long dollars. It's not the time to short the bonds. It's actually time to start looking for longs on the bonds, or to short the yield. In that way, we have the potential way of the Fed jumping in the policy, which means that they probably are going to do the exact same as the Bank of England has been doing, which is buying back bonds, which is technically QE, while you're still doing the hikes of the interest rates, because they want to avoid the same as what we have been seeing in 2008. And I think it's inevitable that we're going to see it, but it's having a very huge impact on the debt markets and the banks. So that's why the yields have to turn around quite fastly. Then the real estate markets can still survive, but it's all a matter of time, and I think that they have to adjust quite fast. So I think that intervening in the market is going to happen relatively soon from now. Now let's jump into the price action of Bitcoin, which is showing strength at this point. We have been seeing this breakout, which is ultimately just massive. We have had this break back into the range after taking the liquidity. Through that, we have been consolidating above 19.3, and we even had a breakout towards this block at 20k, which we barely missed, and now we are just consolidating, which is fine. Now what we want to avoid is that Bitcoin's price is going to fall and nosedive all the way back towards 18.6 again. So a few crucial areas are important to watch here. First of all, I've marked it level here, which is around 19.3, which we are currently retesting in this actual move. So 19.3 and a baseline at 19.250 is definitely key to watch if the markets don't want to consolidate or want to correct all the way back again. If 19.25 is lost, I'm looking at 18.8 to 18.6 again, showing a bit more weakness than at holding around 19.2. If 19.2 is going to survive, the odds are that we're going to continue moving towards 20.8. So that is pretty much, or those are pretty much the levels. If we're looking at the DXY, we are definitely looking at a strong move right now. So it's very volatile, but I think that the odds of the yields falling over is slowly increasing due to all the impacts that we have. Now the question is Bitcoin going to bounce in these regions? If that happens, we'll be fine. So that's the theory for today. I'll see you again on Monday. During this weekend, no videos, as I'll be enjoying some offline time. Have a wonderful weekend. Subscribe, join on Monday's live stream, and I'll see you again then. Ciao!